their capital investments so far is can be is good enough, or it is apa nama dia, worth to invest, to start the business with the capital invested. Okay, so if the entrepreneur in case do not observe their financial performance, they might be cannot notice whether the capital invested is worth or not, and then whether their business is perform well or not. Okay, so basically how to measure whether the business is perform well or not is to look at the financial aspect. Okay, even though all the culture of the business is good, the owner, the entrepreneur is very good in dealing with the customer, in marketing their business. Okay, so many clients comes, but their financial performance is not good, so it does not represent anything. Okay, so financial performance is very important to ensure that the business will give a good return to the owner, to the investors. Okay, so that is why they need to know all the financial indicators that is used to measure the performance of the business. Okay. Okay, so describe the process for obtaining and recording resource needed for an early stage venture. This one I just skip. We just go straight to the terms. So basic accounting concept. Um, Generally accepted accounting principles, GAP, this one, guideline that set out the manner and form for presenting accounting informations lah. The GAP is the general formats to report the financial aspect lah, the accounting, apa nama dia, accounting reports of the business. Usually, because the report is like same, we have financial statements, we have a balance sheet, we have a cash flow statement. That's a very general accounting principles. We call it GAP, GAAP. And then the concept of accrual accounting, the practice of recording economic activity when recognized rather than waiting until realized. So nowadays, the accounting treatment for all company, for all business is use accrual accounting, meaning that it is not the opposite of accrual accounting is real time accounting, or apa nama dia, cash accounting. Cash, when only the cash is coming from the customer, so at that times the accountant will report the cash inflow. That one is cash accounting. Okay, so in cash accounting, no receivable, no payable, only the accounts of cash accounts exist. So accrual accounting meanings that in simple terms, accrual accounting is to report financial aspect or the accounting ni is done nama dia take care of the debt. Okay, accrual is maksudnya receivable, the cash that will be received once it is promised from other party that the company will receive the cash, so it needs to be counted in the financial statement even though the cash is not yet happened. Okay, even though the indebtor do not pay yet, but they receive invoice from the business, so the business is expect to receive the cash in future. So at that time, the accountant need to report it. We call accrual accounting, meaning that accounting for debt. Sama dengan payable. Payable is the accounts that the debt accounts that happen to the business. Even though they need to pay in future, the invoice received, but the accountant still need to record it as payable, the cash that will need to be paid in future. Okay, excuse me, I need to I need to accept your friends. Someone, wait. Okay, I need to admit this one. Okay, so make sure you come on times or early so that it will not interrupt the class lah. Yeah. Okay, accrual accounting. So far, are you clear with accrual accounting?
Clear, Doctor.
Okay, very good. Okay, so now no cash accounting. In Islam, basically accrual accounting is um, not is discouraged because it is not happened yet. It involves elements of uncertainty. What happens when the other party unable to pay? So how the accountants need to report it. Okay, when the time comes and then apa namanya, the debtor cannot pay. So they need to report it, isn't it? The accountant need to be careful lah in recording the apa namanya, the debt of the receivable lah, okay, from the third party. Yeah. Yeah. Poor accounting. The depreciations, the reduction in value of a fixed asset over its expected life intended to reflect the usage of wearing out of the asset. Usually in apa nama dia, in a business, there will be a asset, isn't it? There are two types of asset, fixed asset and current asset. So depreciation happens to the fixed asset. Fixed asset like a building, like a land. So over the times, because of time value of money, or because of time, the value of asset or the value of money is depreciated because of the economic factors, because of some factors. So the difference in value of the asset need to be reported, okay, or recorded. Then we call depreciations. The depreciations of the asset, okay, or appreciations. And then accumulated depreciation, sum of all previous depreciation amounts charged to fixed asset. Okay. So because in the balance sheet, basically we will see there is a asset equals liability plus equity, isn't it? So in the part of asset, there will be a fixed asset and current asset. In fixed asset, the first value of asset is that the value of asset when the times the owner buy the asset. So to report it next year, for example, after a year, there will be a minus depreciations of the asset. So the balance of the value of the asset, we can say it is a current value of the asset. Okay, after minus depreciations. Okay, so accumulated depreciation, they just accumulate lah over time. Sum of all previous depreciations, like a year one, how much depreciates? Is it 100 or based on percentage? So each year, the depreciation need to be accumulated. Okay, charged to fixed asset. If in the case the asset need to be sold out, need to be apa nama dia, nak menghapuskan aset, so they need to count all the accumulated depreciations. Okay. Okay, so basic balance sheet terms and concept. I believe that all of you have seen the formats for balance sheet, isn't it? In the annual report. Okay, you can just go to any websites of the company, you explore their annual report, there will be a statement of balance sheet. So there are items in the balance sheet under asset, under liability, under equity. Okay. So this one under the balance sheet terms. Okay, what is balance sheet? Balance sheet is financial statement that provides a snapshot of a venture's financial position as of a specific date at end of year or after a quarter balance sheet. Okay, so the formula for balance sheet is total asset equals to total liabilities plus owner's equity. Okay, total asset equal to total liability and plus owner's equity. So asset will be on the left side. So on the right side will be liabilities and equity. So what is asset? Asset is financial, physical and intangible items owned or controlled by the business. Financial asset usually we call it as a current asset. Current asset like a cash, apa nama dia, receivable also a asset, because what is receivable is the money that will come to the business in future, will be received by the business in future. So it is asset also to the business. It is a current asset because it is a short term nature. Okay, so fixed asset basically it is long term nature, like a physical apa nama dia, buildings, a land, transport of the business, the car, the lorry. Okay, and intangible items. Intangible items ni like receivable tu lah kan. Intangible items like a copyright, like a trademark, it is also assets that cannot be counted. Okay, the value asset that the company have owned or controlled by the business. Okay, what else? Listing order of asset. These are asset lah. Asset are listed in declining order of liquidity, or how quickly the asset can be converted into cash. Declining order is, okay, I need to wait, Okay. As a reminder to all of you, so make sure you join the meetings on time. Okay, you join the meeting on times, because you just imagine that we are currently in a class, even though it is a virtual class, but it is still class. We should be on times. Why? Because we have to respect the colleagues and also the teacher. We do not want to disturb the class. Okay. Wait. Okay, basically the asset is listed based on declining order from the declining order of liquidity. So the more liquid asset will be put at lower level. Like first we need to write down the fixed asset, and then after fixed asset and current asset. Okay. Okay, liabilities. What is liabilities? Liabilities is hutang. Hutang of the company. So short-term liabilities are listed first, followed by long-term debts or liability owed by the venture. All the liability of the business lah. So short-term liability like apa nama dia, we have receivables, apa lagi liability. Nak kena tengok example of the balance sheet tu. So first current liability, and then after that long-term liability, long-term debts. Owner's equity capital. Equity capital contributed by the owners of the venture is shown after listing on liabilities. Okay, after that owner's equity. All of these liabilities and equity will be at the right side. Okay. So what is current asset? Okay. Sorry, I think I mentioned listing orders of asset. Asset are listed in declining order of liquidity, or how quickly the asset can be converted into cash. So first is not I think current asset first, and then after that a fixed asset. So kan? Declining order of liquidity. The more liquid asset will be put upper. Okay, the more illiquid asset will be put lower. So that is why the explanation here is current asset first and then fixed asset. So what is current asset? Current asset is cash and other asset that are expected to be converted into cash in less than 1 year. Okay, so like apa nama dia? Other asset that can be converted within 1 year and less. So it's considered as current asset. Okay, and fixed asset with expected life of greater than 1 year. Huh? For cash, amount of coin, currency, and checking account balance. Receivable, the credit sales made to the customer. Okay, the money that will be received by the company. Payables is the money that will be paid to the other party by the business. Pay lah, need to be paid. So inventories, raw materials, work in process and finished products which the venture hopes to sell. So all of these are current asset. Current asset because their lifetime is less than 1 year. Okay. Okay, so payables is a liability, short-term liabilities owed to suppliers for purchase made on credit. Okay, hutang company. So accrued wages, liabilities owed to employees, to employees for previously completed work. Accrue is a liability. So bank loan, interest bearing loan of 1 year or less from a commercial bank. It is also liability to the business in case of the business receive a short term loan from the bank lah. If long term loan, it is considered under a long term liability. Okay. So less than 1 year of financings or loans considered as short-term liability. Okay, types of long-term liabilities, loans that have matures of longer than 1 year. Okay, and then capital lease. Okay, capital leases. So long-term, non-cancelable lease whereby the owner receive payments that cover the cost of the equipment plus a returns on investment in the equipment. Okay, so these are the long-term liabilities. Operating lease provide maintenance in addition to financings and are also usually cancelable. These are also a liability to the business. In case the business need this. Computers, copies, automobiles are often financed through operating lease. Like say apa nama dia, the business seek financing, vehicle financings from the bank is considered as operating lease. Financings through a hire purchase agreement. Hire purchase is lease agreement. Okay, so it's considered as operating lease. The monthly payment to the bank is considered as leasing because the contract adopted. Hire purchase or ijara summa al-bain. Rental. So balance sheet impact for operating lease, no assets or lease liabilities are recorded on the balance sheet. Okay, so operating lease, if the banks apa nama dia have involved with vehicle financings from the banks, that car or the lorry, the vehicles cannot be recorded as an asset to the business, even though the business buy car, but they buy the car not in cash. They buy the car by financings, and that financings involving contract of leasing, hire purchase, hire contracts. So the owner of the vehicles is the bank, not the company. So they cannot record it as assets. Okay, unless at the end of the tenure of the financings, if in the case the company have paid all the financings and then the ownerships of the vehicle is transferred to the company, now the company how to record the ownerships of the vehicles, then the vehicle will be put under assets. Okay, so prior settling all the financings, vehicle financing, the company cannot record the asset or the vehicles under asset. Okay.
Doctor,
Yeah.
okay, what if I want to run a leasing company, like a vehicle leasing company? So that vehicle, should I record it as asset or?
Okay. Okay, now your main business is leasing. So how about the owner of all the vehicles that the company own? Is it owned by the company or the company seek financing from external parties?
Using hire and purchase lah.
So tak boleh lah. It's not under asset of the company. Okay, it is a
Okay.
liability. Because the asset under financings, it is owned by the bank.
Right.
Okay.
So unless if I purchase the vehicle using cash, so I should record as asset lah.
Yes, yes. Tengok balik grant kereta, the ownership, the legal ownerships of the vehicles. It is banks or the company. Okay, so if the vehicle still under financings, it is owned by the third party lah that give the financings. Okay. Okay, basic income statement terms and concept. Income statements other than balance sheet, income statement is also important. What is income statement? The financial statement that reports the revenues generated and expenses incurred over an accounting period. Income statement basically reports the operations, the operation wise of the business. Okay, what's how much the revenues generated from the operation, from the business, and expense during the accounting period lah, 1 year. Okay, and then sales or revenues. The important elements in the income statement is sales and revenue. For the balance sheet, basically we need to know the asset, liability, and equity. Income statement, sales and revenue, right? And also expenses lah, sales or revenue and expenses. Okay, how much profit, how much the expenses incurred. So minus, then we get a net sales or net revenue for the business. Okay, what is sales? Funds earned from selling a product or providing a service. So gross earning, net sales after deducting returns and allowance minus the cost of production. Gross lah, gross earning. Okay, so operating incomes or earnings before interest and tax. So basically business will need to pay tax, business tax over the incomes. Okay, so EBIT ni is earning before tax. So indicates a firm's profit after operating expenses excluding financing cost, semua cost tu, tapi before the tax deductions. So net incomes is the bottom line measure after all operating expenses, financing costs and tax have been deducted from the net sales. Okay, so net income is incomes after tax. Okay, EBIT is incomes before tax. So business kan kena bayar tax kan. So the entrepreneur need basically the most important part is net after tax lah, net income after tax. Okay, what about cost? Cost of production schedule, important for preparing the income statement. So before we prepare the income statement, we need to know the schedules for the productions cost schedule. So this dates, how much the production cost, okay, how much the total products, okay. And then cost of goods sold schedule. These are all the schedule prior preparing the income statement. The income statement will need all the cost that involve in the productions of products. Okay, and then inventory schedules, important for preparing the balance sheet. Sebab balance sheet will cover the inventories kan. All the, maksudnya the input the business. Okay, yes. Any question? Okay, so after balance sheet, income statement, now we need to also know the statement of cash flow. The cash flow in the business, whether it is flows very well or in worse flow. So statement of cash flow shows how cash reflected in accrual accountings. Sebab bila cash tu not on time cash, okay, it's also considered because now accrual accounting is a practice, so it also consider the receivable and payables, which is receivable and payables will involve cash, kan? So how it is flowed into and out of a firm during a specific period of operation. Cash inflow and cash outflow. Cash inflow from receivable, cash outflow is for payable. So can be used to determine if a venture has been building or burning cash. Cash is very important. If even though big company, but their statement of cash flow is very worse, meaning that it is negative flow. So it's represent that the company is in a good condition because they fail to generate cash. Okay. So net cash burns occurs when the sum of cash flow from operations and investing is negative. So negative, it cash burns. Tak cukup duit cash. Ya? So variable expenses, expenses that incurred, that these expenses basically will impact the revenues in income statement. Okay, operating break-even analysis, these are among the variables for us to analyze the break-evens of the business. Variable expenses, all the expenses incurred, and fixed expenses, kita ada fixed expenses and non-fixed expenses. Fixed expenses like a loan, cost of interest paid to the financial institutions, costs that are expected to remain constant over a range of revenues for a specific time periods. Okay, fixed expenses. Nak kena bayar all, nak kena bayar interest over the financing period, or need to pay fixed expenses. Salary to the employees. Okay, earning before tax, EBITDA. Earning before interest, tax and depreciations and amortizations. Earnings before interest, tax and depreciations and amortization. Earnings before depreciations, amortizations and tax. Sama tak yang sebelum ni? Earnings before interest, tax and depreciations. Earning before depreciation, amortization and tax. No interest je. So, nama dia EBDAT, the break-even is amount of revenues needed to cover cash operating expenses. The break-even ni. So make sure all the revenues that earned by the business have to cover all the expenses. Okay, so that is the break-even. If there is a surplus, so meaning that the company generate successfully in generating revenues. But if it is same with the operating expenses, then it represents that the company is at break-even points. They are unable to generate revenue yet. Okay, if they have a surplus after minus all the all the expenses, so that they are generating revenues lah. So what is cash flow break-even? Cash flow at zero for a specific periods. Maksudnya no surplus. Dia just meet at par with the expenses. So that is the break-even point. Okay, zero lah balance in the financial statement. If the financial statement is negative, they are cash burns. If positive, they're making revenue. Basic equations, EBITDA equals to revenues minus variable cost minus cash fixed cost. Maksudnya apa namanya, any cost lah, or minus all the costs. Okay, and then where cash fixed cost includes both fixed operating, general and administrative, and possibly marketing expenses, and fixed financings, interest costs. Okay, this one cash fixed cost, bayar all the financings and the salary. So revenues minus all the expenses, operating expenses, then we can calculate the break-even point. Eh? So when EBITDA is 0, revenue equals when the earnings before ni is 0, so the revenue equals to variable cost plus ni lah, maksudnya all the expenses ni. Revenue just able to meet all the operating expenses, which is the break-even point. Okay. But if the EBITDA is not a 0, is positive, so meaning to say there is a surplus in the revenue. They're making a revenue. So far clear? Clear ke?
Clear, Doctor.
Okay. Okay, starting point. Okay. Okay, solving for the break-even level of survival revenues, the starting points, the ratio of variable costs to revenues is a constant and is called the variable cost revenue ratio. Variable cost over revenue, which is break-even. Just at the survival stage of the business, they need to ensure that they are not in a negative financial statement. So survival revenues equals to the variable cost plus cost fixed expenses lah maksudnya. All the operating cost ni. So rewriting the cost fixed cost equals to survival revenues minus variable cost. So senang je, revenue and cost. Okay. Kalau if break even, revenue is equals to all the operating costs. Tak payahlah. Okay, the understanding is more important lah than this one. So this one just to explain that to survive well, the revenue generated from the business should be able to cater for all expenses incurred by the business. That's it. Okay. If the PSA Venture were expecting revenues equals to 1 million, so the cost of goods sold is 650,000, okay, and then the administrative expenses 200k, so marketing expenses 180k, depreciation expenses 100k. This one all the operating expenses. Interest expenses is 20k, and then tax rate is 33%. Okay, so only cost of goods sold is expected to vary direct with sales. Okay, so variable cost returns apa nama dia? Revenue. CRR equals to dia punya ratio tu. All the 650 tu apa? Cost of goods sold minus with revenue 0.65. This one variable cost, the ratio for variable cost over the revenue. Okay, and then the cost fix. Cost fix is the other expenses. So equals to 400,000. And then survival revenue. Survival revenue is expenses. This one the operating expenses. This one fixed operating expenses divide by 1 minus 0.65. Rounded 1,143. So dia punya break even dia, survival revenues, they got a 1,143k, and then cost of goods sold is 63%. So minus cost, this one all the costs they incurred, so equals to 400k. So gross profit is 400k. Minus all the apa nama dia, all the operations, all the fixed costs for the operations minus. So dia punya EBITDA ni 0. So meaning to say they are in a break even. Okay, just follow the equations. The equation said that survival revenue equals to cost of all the costs involved kan. Okay, if it is 0, They are in a break even. If it is more than zero, they are generating profit. If it is less than zero, which is a negative, it means that they are in a cash burning loss lah, loss to the business. That the business incur more costs than the revenue generated after deducted all the expenses, operating expenses involved. Okay. Inilah break even points. Okay, so this one the revenue and this one all the costs. So revenue if equals in the break even points is equals to the cost, they are just to survive the business. They should be upper here. Where like say the revenue is 2,500 and the cost is maybe less than 2,500. Maybe the cost is 2,000 like here. So they are making a revenue profit to the business. Okay. Q&A. I think somebody want to enter our class. Okay. Okay. So make sure you are on time, sir. Okay. So I think enough to explain the break-even point. Identifying break-even drivers in revenue projections. What are the factors that will impact the revenue projections? Contributions for profit margin. Profit margin, like say depends on the cost, how much is the depends on the cost of goods sold and how much the good is sold to the customer. So higher contribution profit margins mean lower level of survival revenues are needed to break even. So profit margins becomes the one of the factor that will affect the break evens. If the profit margin is high, so the break even point no need to be high. Okay, if profit margin is low, so it's meaning to say not easy for the business to survive, not easy for the, it's hard to the business to earn more profit revenue sebab profit margin is low. For example, assume cash fixed costs are 400k and the VCRR variable cost declines from 65 to 60. So maksudnya profit margin dia turun ni. So dia akan saya gunakan negatif. Punya ke the same cash? Ni this one. The first case is they are able to meet the break even with 1 million survival revenue. In case B is 1 million only. So shortage of 143,000k. Okay, because they are reducing their profit margin. Okay. And then economic no part break even terms and concept. Economic value added measure of a firm's economic profit over a specified time period. Okay, what is no part? No part is a net operating after tax or EBIT times one minus the firm's tax rates. Net operating profit after tax. Net profit lah. No part break even revenues, amount of revenues that needed to cover Urbanger's total operating costs. Okay, so usually revenues, net operating revenues is revenue just minus all the costs, the operation costs. And what is no part? The net revenues need to also deduct net operating profit after tax. After deduct tax, then we get a no. One need to be considered by the entrepreneur. So basic equations. net revenue equals to apa dia? OFC. OFC is the total operating fixed cost which consists of cash operating fixed cost excluding interest expense plus non-cash fixed costs. Okay, net revenue is total operating fixed cost. Okay, divide okay, 1 minus variable costs. Cash operating fixed cost plus non-cash fixed cost. Yang ni total operating fixed cost. Okay. So this basically to calculate what is the really net revenue for the business. Need to minus all the tax, okay, all the fixed costs, and then the operation costs. Find the NOPAT break-even revenues for the PSA Venture example. So net revenue, this one just break-even. So 200, this one all the operating costs, net operating cost minus, divide by 1 minus, this one cost of goods sold, minus revenue, net revenue, gross revenue kan, 1 million ni, and equals to 400k divided by 0.3. Tak apalah. Okay, so the thing is we just follow the example. Okay, to find the NOPAT break-even revenues, we need to know net revenue, and also we need to know the operating expenses and also the cost of goods sold. Cost of goods sold is the cost of cost to generate the products, the goods, cost of goods sold. Okay, so divide by this one the revenue from the goods sold, and this one other expenses. That's the main key to calculate it, and you just put in the equations, then insyaAllah you can get the NOPAT break-even revenues. Okay. This one kalau nak need to really understand, then we can go to accounting class lah. Accountant need to know this. But as entrepreneur, we just need to know all the main terms. The revenue, the cost of goods sold, and apa lagi, net revenue, operating expenses. Okay. So the revenue is 1,371,000. In example, in the NOPAT break-even examples, the revenue is 1,371,000. Cost of goods sold is 65% from the revenue. Cost of goods sold 65%, and then which is 891,000. On the operating expenses is here, administrative, marketing, and depreciations. So revenue and minus all the costs here, then the break-even should be 0. If more than 0, then okay lah. The business get a profit. Earning before income tax. Earning before tax. So NOPAT is 0. Earning before tax times with 1 minus 0.33 equal to 0. What is 0.33? Example dia. Tak ada dah. Nanti check balik ya. 0.33. Anyone? Why 0? Because we are now wanted to calculate the break even. So the break even
divide by 33% tax maybe.
33% tax
Yep.
They mentioned before
Yep.
Okay. So NOPAT is after tax. So divide the tax lah. Okay, so because why it is 0, it is we want to calculate the break even. The break even is the revenue should equals to the cost. or the expenses that involve in the business. No part is net operating after tax. Okay, so no tax lah, basically, because of no incomes or no profit generated from the business. The business just achieve the break-even point, which is zero, earning before tax. Okay, earning before tax. Okay, that's all. That's all. Okay, so that's all for the key terms that the entrepreneur should know. Okay, so there are three statements. The first one is balance sheet, the second one is income statement, and third one is the cash flow statement. Three important general statements that need to be understood by the by the entrepreneur. Okay. Okay, so that's all for this topic. Okay, any questions so far? Yeah, I stop sharing. No question, yeah? So after this, we are going to continue with the presentation. Let's stop recording.